Morning, Jason Sen from daytradeideas.com. It is the 4th of November. Yesterday we had a bit of a shakeout in the stock markets, which wasn't completely unexpected. If you read our daily reports, you'll know that. I'm going to try and talk you through why this happened and what we think going forward, at least in the short term. This is a weekly chart of the E-mini S&P. So we've been we've been talking about some serious resistance here. This is a 20-month trend line, this yellow trend line here. It goes back to 2012, so certainly a long-term trend line, and you can see we've just been crawling along below this trend line the last 2 or 3 weeks, and this was a concern. Didn't really think we could break higher, and that was proved to be the case yesterday. So this is the reason we're starting to see some profit taking. At this stage it really is only profit taking. We did a video, I think, on the S&P yesterday, and we predicted some short-term profit taking, which did play out as expected. If you saw that video, we dipped a little bit. We dipped not quite actually as far as our buying opportunity at 1784. We actually bottomed out at 1786, so we missed that by a couple of points. But you can see here on the daily chart, I'll just blow this up a little bit, that the shorter term trend line that goes back to, what's this date here? Goes back to the 10th of September, the 9th of October. This is what we were looking at yesterday. Now we broke below this yesterday, which was why we did a video and warned that we'd see some light profit taking before the non-farm payroll number. Well, as I say, that did play out as expected, and we got as far as 1786. So still a bit concerned here. At this stage, any bounce is probably a selling opportunity. Daily stochastics are negative, MACD is negative. So I'm sticking with the view that this 20-month trend line resistance that we saw on the weekly chart is going to cap the S&P for the time being. We're going to have a look at the 4-hour chart. Not much to say here. We've got a few. We can see some Fibonacci around the 784. That's why I've got this as a target and support. But it does emphasize, if I blow this up, the fact that we've broken this trend line, and I think any rally now above 1795 is a little bit more positive for today. But we're going to run into resistance in the low 1800s, and I don't really see us getting as far as the previous highs of 1812. But if we did, I think that would be a good selling opportunity, and I would certainly be have my eyes peeled for a double top there, which would give slightly longer term bearish implications. But we'll worry about that if that happens nearer the time. Okay, I flicked on here to the Euro Stoxx futures. Yesterday we were warning about this double top in our daily reports, so if you received that, you'll be aware that we were looking for a move lower. We hit the first target. The 30.10 was our first major target, and we said that would be good support. Well, we bottomed at 30.07, so that worked kind of well. So first target's been hit. What happens next? Well, if we start breaking below there, and in particular 29.95.92, which is the November low, then we're in trouble. We're going to be looking for 29.56 and possibly even 29.07. Or if we hold on to this sort of 30.10 3000 area, maybe we're just going to range trade in between, in a 100-point range from here up to 3100, which is the high for this year, in fact. So just watch that double top. A break lower certainly wouldn't be a surprise. A break below 29.90, you probably want to be going with that move, looking for further weakness. You can see this trend line here we've got, which goes back to, let me just scrunch this up a bit, which goes back to, let me see, 24th of June. So again, getting on for a 6-month trend line here, and we are just sitting below that today on this daily chart. So we have broken it. So again, the double top, the break below the trend line, it is looking quite negative, but we do need a break below 29.90 to confirm that. Otherwise, a range trading from the 3,000 up to 3,100 would be the more likely scenario. We'll round this off with a look at the DAX. On Monday we had this little candle here which showed hesitation, and yesterday morning we wrote in our report that this hesitation indicated that we could see some profit taking before the non-farm payroll. Well, we certainly did see some profit taking yesterday, further than expected, to be quite honest. We didn't expect a big dump like that, but you can see that we're heading towards good support around the 91.15, 91.10 area. We've got trend line and Fibonacci there. If we fall that far, I should say that'll probably be the low point for the correction at this stage. We'll see a bounce, and then we'll have to gauge what happens after that. Weekly chart is looking also quite negative. For example, if we were to close around here, well, certainly if we were to close below 92.37 on Friday, that's going to be a bit of a sell signal. We've got a double top here. Last week's high 94.28, this week's high